So now today I'm going to show you the best strategy that you can use to grow your small account. Okay, so now stick up the end of this video to know how to enter and exit the trade. I'm going to show you several examples that you can look at on how to enter the market, so that you too can use these entry techniques. And if you're new here, please subscribe from down there and leave a like to this video. Share to friends so that they can also benefit. So let's go in the video. So now this is our market structure right here. Or is we look at the current market structure, guys, right? So now this is our current market structure. So now, as you can see with this trend, or is before you make any decision or before you enter any trade, you have to first understand the structure. You have to first understand whether the market is bullish or bearish, right? So now, for example, this current market structure was a bullish market because of this break of market structure, the upside. Okay, so now it was bullish market before it reached there. So now let me show you guys, right? So now let's look at the first example, guys. Okay, so now when the market always breaks structure, what do we look at? Now, for example, here we had what we call a high. This is a high right here that was resting here. So now when this high was broken right here, as you can see, that high was broken right there. So now always when the high is broken, okay, when the high is broken, what do we look at? Always we look at the low that made the break of market structure, and this was the low that made the break of market structure, guys. Okay, this is the low, right? That is our low. So now when we also indicate our low that made a break of market structure, always we pull out our Fib tool, our Fibonacci retracement tool, guys, right? And we put it from the low, from this retracement, where the retracement started from, up to our low, this low that we did what, that we marked, right? So now after that, we indicate our premium and discount zone. Now, for example, here we shall need a discount zone, right? So now we shall need a market to come below our 50 fib level. So that is, we mark our 50 fib level. It is right there, okay? That horizontal line, it is our 50 fib level. That means, remember, we said this is a low right here. We said this is the low, okay? This is the low right here. Let me change the color of this line that is marking our low right there. Let me change it to black. Okay, so now this is our 50 fib level, that line, that red line. Okay, so now then when the market comes back, we need the market to come back to our below our 50 fib level. That's a discount zone. And after the market coming there, so now always we have to look for the zones that we shall wait the market to tap into. Okay, so now when you look on your H4 time frame, is there any order block that you can consider here? Okay, is there any fair value gap you can consider here? Okay, so now for example, now we can consider our order block right here. Do we have it? Yes, we can consider our order block right here, this big one, right, in our discounts. Okay, so now when the market taps in your order block right there, what do you consider now? What is next? You just go to your 15-minute time frame. Let's go there. You just go to your 15-minute time frame, tapped in our zone. This is the 15-minute time frame. So all the work is here now. How do we enter the market from our 15-minute time frame? Remember, this is our internal structure now. On our 15-minute time frame, guys, right? It is our internal structure. Why? Because now we shall consider, remember, the market was coming back to our zone when it is breaking somewhat, when it is making some bearish market, right? As you can see, that was a high, then it made some lows, okay, like here, then a break here. Okay, you can see how it was behaving right here. Okay, so I want to show you what we considered before entering this market, guys. Okay, so now you can see, now when it reached here, it made what we call a failed low. Okay, so now always we shall consider that failed low before we enter the market now. Okay, so now let's remove it here, and you see, right? So now the market was breaking was breaking these lows until it was breaking. You can see these lows right that way, that were being broken right here. Okay, until it reached here, it created this low, right? Then it failed to break that low. Rather, it created another higher right here, as you can see. Then it broke it after failing to break the other main low that we would consider, right? So now, after breaking that, after making what we call a market structure shift, right? Because now, when you bring your trend line right here, you will see that the market has turned bearish, right? From our bearish market to our bullish market. That means now we shall wait for the market to come to any zone right here, then we buy. Okay, so now that is the entry technique I wanted to show you first, right? So that is the first entry technique that we would use right here. Let me show you guys. Okay, it is right here. It is right here. So when it reached here, this is the low right here that was fair to be broken. Okay, as you can see, this is the low, that is the right there. Then after failing to break that low, you can see now it created it made some kind of a trend line right here, because now it failed to break the other low. Now it created another low right here. Okay, so now when you bring your trend line right here, you will see that now the market has started creating some bullish signs, right? So now you can see guys, right? Some bullish signs. So now this is the higher low that was broken, and it confirmed us that yes, bearishness has turned to bearishness. Okay, so now after, see, it broke here, it came back here. You can see now there was some bit of consolidation, then boom, the market bought. Okay, so now that is it. After breaking there, the market will always come and retest there before it buys, guys. Okay, so now it is the same thing now. It is the same thing right here. Just know this entry technique, it will always appear and it will always be formed, guys, right? So now it is also here. Then here the market bought for some time. Then it reached here also, it created another bearish sign. Okay, so now it is right here, guys, right? Let me show you another one, right? So now that was a high. This was, you can see here, it broke this last low. Then it made a failed high now. Then it broke this failed high, this low. Okay, then you can see it went back, then boom, it sold, right? This is the same thing that we used there on our bullish example. When I do this, right, you can see, right, this was a high, this is a failed one, right? This is a failed high, right? Then this was a low that was broken after getting that failed high. Then boom, the market went back and it sold, right? It sold from a certain zone, right? It's the same thing here. It is the same thing here. It will always appear on your charts. Okay, this was a low right here. This was a low right there. And let me first indicate this high. Let me first indicate that high, guys. Then this was also a low right here. Okay, you can see. So the market, when the market came, it broke that low. Then after breaking that low, you can see it came back to our zone, right? It came back to our zone. Then boom, it sold, right? It sold from somewhere here. Someone would just enter and you target any zone of your choice, guys, right? So now it is the same thing that will happen again and again and again. We are here, we called this trade, but how did we get this trade? The market was selling right here, okay, because we were on the H4 zone. Then when the market reached here, you can see it left a low down. Okay, it left a low down. Then this is the high, right? This is the zones that it left right up here. Then you can see when the market came here, right here. Okay, this is a low, this is a high. Okay, it was ranging right here, though we had the other high right there. Then you can see there was a liquidity sweep right there. It broke that high right there. It came back, then boom, that's what you can see right there. It bought right here. Okay, so now this is a change of character, another entry technique that we can use, right? Or is when the market is selling. For example, the market has been bearish. Okay, the market has been bearish for some time. Okay, this is what we call by a change of character or a market structure shift, right? Turning from bearish to bearish, or from bullish to bearish. Okay, so now this is what we call a shift in a market structure, guys, right? A shift in market structure. Always you see these zones forming, right? You'll always see these zones forming on the chart. Whenever you see that, just know this is a protected low. Okay, this is a protected low. If you are in a bearish market, it is hard, it is almost near to impossible for that low to be broken. Rather, the market will respect the zone, right? As you can see there. So always these markets will give you what to do. So you can see when it came here, you just put your stop loss there. Then of course you can target here. They're almost 200 pips. La hawla. Almost 200 pips, right? So now this one, it is like it happens almost every time in the market. Almost every time. Even before it did that, we had a bearish market here. It was a bearish market. There was a bearish market right here. This was a high, right? Then we had this, we had that. Okay, we had this was a low that was left here. So we were waiting for this low to be broken before we do anything, right? And fortunately it was broken. Fortunately, that low was broken. And after that low being broken, you can see, okay, you can see it came back, and it came back there. You can see, guys, right? It came back there, then it sold, right? So now these entry techniques, just know, they will help you grow your small account. Always when you wait for those killer zones to be tested, and you enter it trade, guys. So now we shall see more of these entry techniques, guys. So for today, let's stop there. Thank you for watching. Don't forget to subscribe and give a like this video. Share it with friends so that they can also benefit. Thank you for watching. This is Jimmy. Stay safe and goodbye.